Good evening. I have tonight for you a short PowerPoint presentation. It's about 10 slides. We went over this with the Audit Committee about 2 weeks ago in detail, so tonight is more of an overview for those who might be watching. Unfortunately, my senior manager, Mark Callanan, couldn't be here tonight. He got stuck at another school audit presentation this evening. So what I'm going to cover for you tonight briefly is just some of the required communications as your external auditor that we have to provide to you. And then most of my time will be spent going over the results of the activity in your general fund for the year that ended June 30th, 23. We'll touch upon some of the fund balances and some of the other funds besides the general fund. And then we'll just take a quick look at your current debt service obligations on all the monies that have been borrowed by the district. So as part of our required communications with you, not only are you in possession of the audited financial statements that we're going over tonight, but you also have an extra classroom activities report, and you also have a communications letter where we provide you certain required communications related to the audit. So in that document, there are some things that you as management and the board, those charged with governance, are required to do on your end, including the selection and implementation of appropriate accounting policies, making sure that the financial statements that we audit for you are presented in accordance with U.S. generally accepted accounting principles. You have to have the proper internal controls in your business operations to make sure that the numbers that are being generated are accurate and good. You have a host of laws and regulations and provisions that you have to follow as a public school, not only from New York State, but because you also get federal dollars, there is also a separate set of federal requirements. And obviously, as the board, to set the tone at the top, just like in any business. What our responsibilities are include what we deliver to you and are presenting here tonight. You get our independent auditor's report on the financial statements. It is an unmodified opinion, which is a clean opinion. It's the highest form of assurance that an auditor can provide their client. As a school district, you're also subject to what's known as the Federal Yellow Book requirements on controls and compliance. And because you received this year and expended over $750,000 in federal aid, we also had to do a separate compliance audit on a portion of your federal funded programs. And that's also included in the audit report. And as I mentioned earlier, we've also issued an extra classroom activities report, a separate letter that has all these required communications, and what we call the management letter, some of the comments that we had on some of your internal control processes and stuff. We are required as your auditor, if we found any fraud or illegal acts going on in the district, to communicate those to you. Happy to report that we did not. It was very easy working with John in the business office and all the folks who work under him, so we appreciate that. We did not find any major misstatements of the numbers that were provided to us that required us to make any adjusting entries to your books. And basically the timeline, this has been a process that's gone on over the last 4 months or so. It started back in June when we do some preliminary audit work. We send out confirmations to your banks and your attorneys and so forth. We review your internal control processes at that time to make sure nothing changed from the prior year. Then the main audit took place in the middle of August. The team was here for about a week, gathering and getting all the information from John and his folks, all the revenues, expenses, all the bank recs, all those kinds of things. The audit was then completed in mid-September, and that's because New York State doesn't get us all the information we need to finish the audit relating to pension reporting, and then we have to put it all together once we get that information. And then, of course, once that was completed and the report was completed, as I mentioned, we met with the audit committee a couple of weeks ago. So now, here are the numbers for the year ended June 23. This is a very high-level summary of the general fund, which is the fund that your voters vote upon each spring for your operations. So you could see the top line, you had estimated to collect revenues of about $54 million in the first two columns, And then what actually happened was you collected about 55.4 million, so you did about 1.4 million better on the revenue side, and we'll take a look at what caused that. And then you had anticipated spending approximately $55.5 million in your spending plan, and in the third column you only spent about $53.6 million. There's a certain amount encumbered, things that were not completed by the end of the year that roll over to the next year. So overall on the spending side, you saved about $1.5 million, or about 3% of the overall budget. So when you get down to the bottom of the first two columns, the budget anticipated utilizing about $3.7 million in fund balance. Some of it came from monies that you gave back to property taxpayers by not, raising taxes by that amount. Some of that has to do with the rollover of encumbrances from the prior year. But the good news is, while you didn't deplete your fund balance by 3.7, because that was the plan. If everything came in according to plan, fund balance would have gone down by 3.7 million. In this case, you could see in the third column, it only went down by about $265,000. So with the encumbrances factored in, you look in the final column and you see a positive 3.1 million. That means we call that a budget surplus. You did 3.1 million better than your plan. So that was good news. So the $265,000 reduction to fund balance, the school district started the year with fund balance of about 11.8 million, and so you ended the year, as you could see, with about 11.6 million in fund balance. Just taking a slightly deeper dive into the revenues. What this sheet did, because we couldn't fit all the revenues on here, is this actually covers about almost 100%, you see at the bottom, in these just handful of categories. The first line is the property tax line, and of course that comes in right on budget. The town has to make you whole for the taxes, whether they've collected them or not. Whatever they didn't collect is on them to collect, but they have to make you whole. And that tax levy, was slightly higher than the previous year, and that was within the tax cap increase that you asked for this year. The second line is the STAR money. So this is the money that is credited on homeowners' tax bills for those who qualify for the STAR payment to help reduce their property tax. So this money was paid to the school by New York State. So overall, if you take the two numbers, it was about 39.2 million was your property tax levy for this fiscal year. Then there's the non-property tax distribution, which is the sales tax distribution. Westchester County shares its sales tax collections with all the municipalities and school districts in the county, other than the big cities like Yonkers, Mount Vernon, New Rochelle, that they kind of have their own deal. And the good news was, because we saw it when we audited the county, sales tax was way up in the county this year. A lot of it's post-pandemic spending and so forth, some of it's inflation, and therefore they share a fixed percentage with everybody. So your sales tax this year came in about $963, much better than you had planned for, and better than the previous year. This district collects a lot of money from out-of-district tuitions. That number did come in slightly less than last year, but it's still a rather large number, of your budget. And then state aid this year was much higher than you expected and much higher than the previous year. Obviously, the state was, continuing to fully fund its foundation aid formula. You also got some extra, building aid money for all the projects that you have going on here. So overall, as I said, the revenues on this page cover, almost 100% of your total revenues. And just to give you a 3-year history of these selected revenue items, you could see it's been pretty consistent, over the 3 years. Basically your tax increases have been, within the cap. And then of course, state aid has grown as the state has fully funded the formula, and you have some, increases in building aid. Now on the spending side of the equation, again, this is not all the categories. This counts for about 2/3 of the overall spending. You can see that your spending this year in these categories totaled about $36.5 million. A lot of these are, so the first one is operation and maintenance of plants. So that's, really the buildings and grounds operational costs for the district. These costs were up slightly, from last year as well. This includes fuel and heating oil and those kinds of things, and utilities, which were up this year. Your teaching expenses, which is your main teaching codes, came in at about $13.6 million, so much less than budget, slightly higher than last year, again, having to do with contractual salary increases, step adjustments for your professional staff. There's really nothing on this sheet that stands out to me when you compare it to last year. Transportation was up compared to last year, but obviously fuel costs and things like that were up this past year. Teacher retirement costs were up this year because the state teachers retirement system raised the contribution rate for everybody. It was essentially about a 5 or 6% increase, and then you throw salary increases and step increases, and that's why teachers retirement was up. Social Security goes up as salaries go up. And of course, health insurance was up about $600,000, but that seems to be the same thing every year. You'll see also that the transfer outline was about $2.6 million compared to about $800,000 last year, but that was a planned transfer, a planned budgeted transfer from previously appropriated fund balance to fund some of your capital improvements that you have going on. And again, this slide just shows you a 3-year expenditure history. It's really very consistent year to year if you back out that transfer to capital, which is the last line, because that's almost $2 million more in 23 than certainly in the previous year. So then, if you look at it, it's the standard kind of increase for the school, for salary increases, benefit increases, and so forth. So the key slide of everything that I'm presenting here is this one, which is the general fund balance. And as I mentioned a couple of slides ago, this year's ending fund balance was a total at the bottom there of 11.6, just down slightly from the 11.8 million last year. But the fund balance is broken into several components, and really, more than 2/3 of your fund balance are in these various restricted categories. So these are all categories that are established under general municipal law or education law, but all of these can't happen without board approval. So you're establishing them within the parameters set by the state. So you have approximately 2.3 million, 2.4 million set aside to fund tax certiorari claims. Westchester County, there's a lot of tax certiorari claims in every school district. You have this pot of money to go to when these things are settled. Whereas other schools who may not have it would have to go out and bond and borrow money to pay off any large tax certiorari claims. You have money set aside for employee benefit accrued liability. That's vacation, sick time that's due to employees at the end of the year. You've set aside money for both the ERS retirement system and the teachers retirement system. These are allowed under law. So these are really there to cover if the stock market tanks and the investments in the pension plans go way down, they have to maintain a certain amount, based on the liabilities. So they're going to come to all the school districts in the state and say, give us more money. So if they had to raise the rates to do that, rather than having to tax the residents and the businesses, again, to cover that added cost, this would be a pot of money that is there that you could draw from. And then really the last line in restricted there is future capital projects. The voters had authorized you to set money aside over X number of years for a maximum amount. And you could see this year you did put some additional funds into that reserve to get to the $819,000. Again, of all these reserves, even though they were all board established, this reserve does require voter approval eventually to take it out and spend it for whatever purpose you're going to use that for. You have purchases on order, which are encumbrances, pretty similar to last year, about $350,000. And then what you did was you gave back in tax relief this $1.1 million, which is basically the same that you did 2 years ago, if you look in the 21 column. It was higher last year. That difference was because you specifically earmarked that money to transfer money to capital for the project. So it was a one-time use of fund balance for a one-time thing, and now you're back to what you had done 2 years ago. So the good news is that the unassigned, which is the free and clear fund balance at the bottom there of 2.3 million, is 4% of your budget for 23-24. That's the maximum that you're allowed to have in there. So that's good news for the district, that you have a good pot of reserves here for various things, and you're at the maximum allowed under New York State in the unassigned. So then quickly, I did mention the school does operate 4 other funds. You have a capital projects fund with a bunch of stuff going on. There's more detail of the capital fund in the full audit report. A lot of the money this year was the transfer that came from general and the bond money that was issued this year to fund the project. So now there was $4.5 million in there as you're ongoing with the project. Your debt service fund has $2.2 million in it. That's money that is either unspent capital money that was bonded or interest earnings on capital, and this money can only be used to help offset future debt service payments. And then your school lunch fund, pretty normal activity for this past year. And then special purpose mostly includes the extra classroom activity funds, the ins and outs within extra classroom activities. And then finally, just to give you a summary of your debt service situation, you currently have 5 general obligation bonds outstanding. And as I mentioned, in this fiscal year, that last item there, the $2 million, was issued during the 22-23 year. So the current outstanding balance as of June 30th on these bonds principal was approximately $44 million. And then at the bottom of the page, you see what the payment schedule is in individual years for the next 5 years, and then in 5-year increments. So it's approximately a $4.5 million, debt service obligation that the district has to repay those borrowings. Obviously, you get some state aid to offset that. But these are your obligations as of right now before you would do any other borrowings. And so with that, that's pretty much all I had. And I'd be glad to take any comments or questions that you might have.
Thank you. It's great. Thank you. And thank you
you.
to our business office and the superintendent. It's nice to see a very clean audit.
I can't tell you. Thank you all very much.
Thanks. Have a good evening.